Hello, this is James here from VictoryOptions.com, and yes, I am back. Someone I know named Harish, who is a fellow trader, sent me a tweet and said, once you play with options, you're always an options player, and I believe that. This is a trade journal that I do here. I have no market making professional options trading background, so this is just my own trade journal. So do not take this as investment advice. Yes, I did take a break and did a little bit of back testing during my break when I just took a break from options and decided to focus on some other things. But during that time, I stepped away from the computer for a bit, and then I started to do a little bit of back testing and realized that options trading for me is more of a marathon than it is a sprint. That I'm not quitting my day job, so if I'm going to do this, I've got to bring some balance into it, since I do enjoy it. Came back from my break after doing some back testing as well, with some strategies that I had done in the past, and came up with some new rules and some new ways of approaching things. So as I do these videos, you'll get to hear some of the new ways that I'm approaching my own trading of options. Right now, one of my things that I'm focusing on is risk. I am trading a lot smaller. In fact, my account right now has $100. Yes, you can trade options with $100, and I am doing that. So this is more about it's more about trading than it is about making money, and so that's why I'm only doing just a small amount. I think. In the Bible, Jesus says that if you can't be trusted with a little, then how can you be trusted with a lot? So I'm going to see about working with a little, and maybe one day that will turn into a lot. What I also learned when I just looked back at my past trades and the time I was spending in the trades that I was doing, I found out that in my non-directional options trades, I was really fighting the trend. I was really fighting the tape. Let me give you an example of that here in the IWM. I'm going to go back to 2 years, and this was a time here back in 2010 as the market just kept on going up and up and up, and I got really, really, really frustrated, and I tried to fight this trend all the way up. And I always thought, oh, it can't go any higher, it can't go any higher, and so I'd put on some bearish trades. And then it would go higher, and oh, it can't get any higher. So then, as it was going higher, I'd put on some more non-directional trades, and just couldn't believe that it could go any higher. And it just got to the point where I had to throw my hands up and get out, because I was always fighting the trend. And so what I want to do now is when I place trades, I want to trade, since I do primarily non-directional trades now. Don't make any major directional bets. I'm market neutral. That when the trend is going up, I'm out. I'm not trading. I'm stepping in the back, and I'm hanging out on the sidelines. That's one of the options that we have as retail traders is we don't have to be market makers. We don't have to trade every single day, every single moment. We can step out for weeks or for months. At least I can, because I don't need to be trading every day. I don't need to be trading every month. And so if the trend is going, then I'm just going to sit on the sidelines and do other things and not worry so much and just not fight that trend. I love trading, but I don't have to trade. I don't need to trade. I'm okay if I don't trade, even if I'm out for a couple of months not trading any Iron Condors. It's not fighting the tape, and that's what I'm learning now by using a couple of favorite indicators to discern when the market is in a trend and just staying away during that time. My goal is to make good trades, not to make a bunch of money. And another rule I have is to balance life and trading. Trading is not my life. I got other things in my life that are important to me, and trading is just one of those things. So I got to balance my trading and my life and my work better this time around. So let's talk a little bit about the kinds of trades I'm doing now and what I've got on here in the February expiration cycle. Right now, as I said, I'm using a couple of indicators. One of them I like to look at is the Arun oscillator, just to judge where we are in a trend and to see if we are trending or if we're more of a trading range. And so this is one that I've got on the screen here, and let's go over here and let's go to the most recent time frame, where again we see the Arun and we see the most recent price action. And what I'm doing now is with my Iron Condors. I'm just doing Iron Condors right now. No calendars, no double diagonals. I've done those in the past. I'm not doing those anymore, at least at this point. Just Iron Condors. And what I decided to do is I decided to put on an Iron Condor. You'll notice that back here on January 3rd, first trading day of January, I put on this Iron Condor. And as you can see here, when you look at this Arun oscillator, the oscillator was showing that price was in a trading range. And so I decided that since it had been in a trading range here for a week or two, that this might be a good time. Plus I had some other indicators that were showing that we were still in this trading range period. This Arun oscillator in my system tends to give early signals. So again, notice that we were in a trading range and decided that for the February cycle, about 50 days out, to go ahead and place an Iron Condor trade. And that was the 79.80 call spread, okay, 79.80, and the 68.67 put spread. And did that for a credit of 48 cents, $48. 1 point wide Iron Condor. So not a whole lot of risk. If this thing goes against you, you're out $50 if you do one contract. So not a big deal at all. Again, this is about the trade. It's about making the trade, not making a bunch of money. It's about making good trades and also learning about yourself when you make those trades. So I put that trade on here, about a 1-to-1 risk ratio, 50%, 50% risk reward, 1-to-1. About 50 days out. And why I'm doing more of these types of Iron Condors now, these 50-50 Iron Condors, is because I don't do adjustments. I don't like doing adjustments. I don't have the stomach for adjustments. I've done adjustments in the past, and it seems like whenever I make an adjustment, the market turns around. And so I decided that I'm going to put on positions that if they go max loss, then they go max loss, and I got to be okay with that risk, having it out there, rather than putting on really high probability Iron Condors like I have in the past in larger products. I'm doing lower probability Iron Condors in the IWM. I'm just focusing on the IWM right now. In the past, I've traded, USO and TLT and TBT and DBA and all those others. Right now, just the IWM. Don't have time to look at those other markets right now. So again, just doing these 1 point wide Iron Condors about 50 days out. No adjustments that I'm doing at all in these. If they go to max loss, they go to max loss. And then the way I'm going to mitigate against risk is by placing new trades when the trend says that, when the indicators say that I should, when we are not in trending markets. That's it. No adjustments for me. I don't have time to do them. And in fact, in the past, I've done adjustments and I bailed out of trades early. When I look back at those trades, if I would have stayed in, the trades would have gone fine. If I just would have stayed in, yeah, some of them would have gone bad. But if I just would have stayed into most of those trades, because the probabilities are on my side, then they would have worked out fine. But I bailed out early when it touched a short strike, or when something funny happened, or I got a bad feeling about something. When they were defined risk, I should have just stayed in. So that's what I'm going to be doing now. My exit rule on this Iron Condor and on these types of Iron Condors now are, when the verticals do get to trade cheaply, I will remove them. I will take risk off the table in these verticals. So you'll see that I did put on this Iron Condor here for a 48 cent credit, and you can see, the market has been trending, and it's been trending upwards rather well. And so you know what, at this point, it got to this day right here. This is January 24th, and I said, you know what, that put vertical was trading for 3 cents, so I decided to bail out of that put vertical and take my profits on that and reduce my downside risk. The last few days the market has been going higher. I think that vertical is now trading for a penny or something. So, if I stayed in, I would have gotten 2 more cents. Big deal. I guess I'd rather be out. My other goal is that when the short options, either short option reaches 5 cents, I bail out. My broker gives me free commissions to bail out of options that are 5 cents or less. So I know that when it comes to these verticals or these short options, that if I can get out of them either as a vertical for 5 cents or as a single option for 5 cents, then I've made enough money in those, and I'm not going to leave them open. So as you can see, January 24th, got out of this put vertical um, this February 60, 68, 67 put vertical for 3 cents. Now notice that I still have the 79 and 80 vertical spread still open, okay? And it's trading at 79.72. So that call is in the money. Okay, what am I going to do about it? Nothing. I'm going to leave it alone. I'm going to let the probabilities work in my favor. When am I going to close it? I'm going to close it on the Monday or Tuesday before the February expiration. So if when expiration's on Friday, then I'm going to close it on the Monday or Tuesday before, okay? Because as you know, as you get closer to expiration, then gamma shifts and things just kind of flip around really quickly, and I don't like trading that close to expiration anyway, with assignment and all that. So I'm going to bail out Monday or Tuesday of expiration, and then go on to the next trade if there is another trade to be had. So that's what I'm going to do on this. I'm not bailing out. If it goes to max loss, it goes to max loss. I'm out 50 bucks. There's nothing I could have done about it. I made a good trade when I made that trade, and I'm not going to try to fix it. I'll place new trades if the market shows that it's in a trading range. If it's in a trading range, if it's not trending, that's when I'll place new trades at that time. I'm also doing one trade per expiration cycle. Some people like to layer a number of trades within an expiration cycle. I'm just going to do one right now. Maybe as my account gets larger, I'll do more. But right now, just one trade per expiration cycle. And again, just iron condors and just doing the IWM right now. So that's where we're at right now. Again, we've still got a couple of weeks until the February expiration cycle. When you drop over into the Analyze tab on this one right here, you can see that we'll add our current price right there. You can see that's where we are. Set slices to break even. So there we are. That's where my break even point is. Make a penny or more, and that's where we are right now. And I still got a roughly a 50-50 chance. So I'm going to let it play out. I'm going to let it play out and see what happens. So this will probably be my my only video here for the next couple of weeks. I might come back to you, probably come back to you the week of February expiration just to see what happened to this. Right now, we're in the middle of those two short strikes, so we're just hanging out up here. I'm not worried. I'm going to let it go, and then, like I said, get out of this Monday or Tuesday of expiration. So thanks so much for watching this Victory Options Trading Journal from Iron Condor for the February 2012 expiration. My name is James, and I'm wishing you victory in life and in trading.